fragmentation seems to be the answer. But the US holds the one weapon, which is the dollar. 87% of every single trade transaction on earth is in that one currency. And they will use it to their advantage. As we saw with Russia, they just cancelled their reserves. You know, it's staggering how powerful the US is. So that change to a multipolar currency world will take time. It just simply can't happen because the world is 400% of GDP in debt, 400 and something percent, of which at least 50% of it, maybe 70% is in US dollars. So if anybody tries to move away from the dollar policy, they've got no dollars to pay their debts, in which case everybody goes bust. So all of these things have to be done slowly. We have to split the world apart slowly.
Amid a widespread financial crisis that has seen multiple banking giants collapse and more at risk, Raoul Pal, a former hedge fund manager, believes that this situation could further strengthen the power of Bitcoin, as well as the cryptocurrency market as a whole. Due to this declining trust in banks and people fleeing into alternative systems, becoming aware of their benefits amid crises, Pal believes that the crypto industry and Bitcoin could explode in the future, closely resembling the chart patterns from 2013. Given fragile economic conditions, any new adverse development, such as higher-than-expected inflation, abrupt rises in interest rates to contain it, a resurgence of the COVID-19 pandemic, or escalating geopolitical tensions, could push the global economy into recession. This would mark the first time in more than 80 years that two global recessions have occurred within the same decade. The global economy is projected to grow by 1.7% in 2023 and 2.7% in 2024. The sharp downturn in growth is expected to be widespread, with forecasts in 2023 revised down for 95% of advanced economies and nearly 70% of emerging market and developing economies. In this video, Raoul Pal gives a macro outlook of the global economy, the liquidity crisis, money printing, and the global shift of power. Let us now get into the video. Make sure to give us a like, subscribe, and turn on notifications.
Money printing lowers the value of the denominator, that raises the value of the collateral optically. So people can't go bust when you print. Right? It's a really key thing that people don't realize. Secondly, I've done a lot of work on this. I wrote an article called The Truth and the Trap, where I calculated that the amount of government debt growth. Well, so no, let's start at the beginning. The government is 100% of GDP in debt and the private sector is 120% in debt. Let's call them both 100 for easy maths. Let's say the economy is growing at 2% and interest rates are at 2%, just for the easy maths. So 2% to pay the interest rates. If GDP is all economic activity, GDP growth, then one side eats up all of GDP growth. So the private sector eats all of GDP growth. So how do you fund the government sector without dropping GDP by 2%? You print it. And that's what they've been doing. They've been printing the difference on a 33-month lag, which is a 3.5-year time horizon, which is where all the short-term debt funding is. They just basically print the interest payments. The Fed balance sheet has been growing exactly by the amount of debt growth in excess of GDP, because that is interest payments. Now, the problem is if the rates are at 5%, private sector, public sector, well, that's 10% of GDP that needs to come to pay for it. GDP is growing at, what, this year will probably grow at 1%. So you've got 9% shortfall in GDP. Well, guess what? That's never going to happen. So the Fed's job is firstly to get rates down. So they need to jack them up, get rid of inflation expectations, get them all the way down again, and then print the difference. And they've been doing that all the way through. And guess what? So has Europe, so has the UK, so has Japan. And I'm just writing the article. I think I can prove that they basically all know what they're doing, which is they are printing the interest payments, and all of the central banks are doing the same thing. And it's like a giant agreement that they've never told anybody about. And I'm just doing a lot of work on this now. So I don't think that...
You don't think the chickens are ever going to come home to roost on that game, basically?
No. And what I think is GDP growth, which is the issue here, which is the real issue. GDP growth is made up of population growth, productivity growth, and debt growth. The debt growth, the rate of change has stopped because it's basically just interest payments. As long as you don't let your interest rates rise to 5%, you keep them about that GDP level, you can get through. Population growth, well, we know that's now dyed in the wool all the way down forever. So you've got productivity. So productivity has to change, and productivity is technology, essentially. And the core component of productivity, so technology just increases the amount of output per unit of energy. But what we're going to do within this, and Europe's forcing the way, is we're going to lower the cost of energy and decouple it from the fossil fuel market, which on an inflation-adjusted basis has been about the same price for the last 60 years. Solar, geothermal, everything, including nuclear, will drive the cost of electricity well below that anchor rate of fossil fuels. That is the complete step change for the world, where we can get out of this mess. And we got out of this mess in the 1950s.
Saying, right?
Sorry?
Chamath has been saying this for a long time as well. Like the marginal cost of energy is going to go down to zero, and that's going to be one of the main.
Yeah, that's my view. Technology going exponential, marginal cost of electricity to zero is a complete game change for the world.
In the United States, growth is forecast to fall to 0.5% in 2023, 1.9 percentage points below previous forecasts, and the weakest performance outside of official recessions since 1970. In 2023, Euro area growth is expected at 0%, a downward revision of 1.9 percentage points. In China, growth is projected at 4.3% in 2023, 0.9 percentage points below previous forecasts. Excluding China, growth in emerging markets and developing economies is expected to decelerate from 3.8% in 2022 to 2.7% in 2023, reflecting significantly weaker external demand compounded by high inflation, currency depreciation, tighter financing conditions, and other domestic headwinds. Raoul Pal talks about the changing world order and how it will be difficult to trump the United States as the world power. Now let's get back into the video.
We have to get rid of this debt situation slowly, because if you don't, all outcomes lead to complete societal global collapse, which nobody actually wants, apart from maybe Balaji.
So what is your view on crypto in that world then?
Crypto in that world, as I've always said, I mean, I got into this 2013 for exactly this issue. I lived through the European banking crisis. Our local bank in the village went bust and took people's money because they converted deposits into preference shares and then defaulted on the whole fucking thing.
Which bank was that?
I can't even remember which one it was. One of the bloody regional banks in Valencia. But they were terrible. I mean, the Spanish banks, the Italian banks, what they did was awful. And then Cyprus was the big ringing the bell moment when I started trying to set up the world's safest bank. And then basically I was told, if you have a non-fractional reserve bank, you'll take all the deposits, which Caitlin Long is learning. They don't want it. So that's when I learned about crypto. And that case is, I mean, this banking situation is almost identical to the European one that happened. And we know the answer is, right, we've got all this commercial real estate stuck on these banks as well. That's going to end up in the balance sheet of the Fed. The Fed will be taking chewing gum wrappers as collateral, to give out loans to stop this thing imploding. Let's take anything, as the ECB did. So crypto does well in this environment because it is a way out, right? Every time you debase the currency over time, crypto goes up. And it doesn't go up just by a factor of the devaluation. It goes up by a large multiple because it's a technology that's building a parallel system here. So it can only be bullish. The most powerful narrative I've seen for a very long time is the sticky, higher for longer. Inflation is ingrained in the system and we're not going back, and this is a different world. So I put a log chart of 2-year yields, 10-year yields, right? And it's just one-way trend. And we saw this massive spike down in yields and an equal and opposite spike up, the pandemic. But the trend probably still going lower. And we look at it the same with CPI. And I look at this now and I'm thinking, have the bears got themselves in the same mess that the bulls did when it was the other way around? And actually the trend hasn't changed at all. And we often have to step outside of our own narrative to ask ourselves the hard question is, has everything actually changed or not? I don't see the evidence that it does, that it has.
I personally don't see a world in where interest rates can go higher. I just don't see that world up for a sustained period, not with the amount of debt that's out there, without seeing like a large recession. And the idea that the QE was causing inflation just was never really a believable. Like, we had massive QE for 15 years and there was no inflation. It seemed like this was a cost push thing, which then got built into inflation expectations, which will hopefully dissipate with time. But it's not, in my eyes at least, it's not a.
There is no evidence from all the decades in Japan, plus Europe, plus the US, that QE does anything. It doesn't leak into the system. So here's another conundrum that nobody mentions. It's like, well, obviously, it goes to the banks and they lend out to hedge funds. It goes into the equity market. Look at the volumes of the equity market. Doesn't happen. The volumes do not correspond to that narrative. What's actually happening, as you guys have seen in emerging markets, is when you debase a currency, the markets just adjust the price. Right? Most people don't understand how the Venezuelan stock market goes vertical, or the Iranian stock market, or a whole bunch of these things. They're based on the debasement of currency. People get confused about hyperinflation, which is a consumer. There is a point where it tips, but if not, it does not affect prices, because you and I don't get more money because the Fed is printing it. We just don't. And what do? Go and tap on the Barclays door and say, well, they're printing money. Can I have some too, please? Let's fuck off. Yeah, it just doesn't happen that way.
Gains for emerging market currencies will probably be dominated by high-yielding currencies rather than low-risk bets, many analysts said. Marko Kolanovic, the chief global market strategist at JP Morgan, pointed out that riskier emerging market currencies have historically been resilient to a Fed repricing as long as growth remains robust. Usually, the lowest-yielding currencies are the first casualties whenever the market reassesses Fed policy. Widening interest rate differentials are supportive of carry trades, where traders borrow in low-interest rate currencies and buy those providing a higher rate of return. Asked which segment of emerging market currencies would perform better over the next 3 months, there was no clear majority view. 19 of 40 respondents said high-yielding currencies, 11 said commodity currencies, and 10 said low-yielding currencies. Commodity currencies are also expected to appreciate due to China's economic reopening. In a global economy beset with low growth and high inflation, we need a much stronger trade engine. Trade growth is expected to decline in 2023, which makes it even more critical to roll back the distortionary subsidies and trade restrictions imposed in recent years. Strengthening the role of trade in the global economy begins with vigorous World Trade Organization reform and by concluding WTO-based market opening agreements. But finding agreement on complex trade issues remains challenging, given the diverse World Trade Organization membership, increasing complexity of trade policy, and heightened geopolitical tensions. Will the U.S. remain long as the global world power, or will they be overthrown? Let us hear your opinion in the comment section below. Also, make sure to like, subscribe, and turn on notifications. Thanks for watching.